Hey, welcome to the exchange. In this video, I'll take a look at Lucid Motors, kind of do a stock evaluation, kind of where they're at right now, what the risks are for the future, kind of where they could go if everything goes well with the ramp up. So this is the model I built real fast. This is the actual revenue ramp up. So you see in 2021, $27 million. In 2022, I'm saying roughly $1.4 billion. And you're seeing, hey, I'm saying by 2028, $20 billion plus company or a revenue company right there. So we'll see kind of where they're at. Cost of revenue, look at gross margin percentage down here. I mean, it's going to be very, very low initially, and this is kind of expected. We have no guidance though, which is kind of a red flag as well too. So we don't know where it's going to land. I mean, either way, it's going to be very, very low in 2022 and probably 2023. 2024 we'll see, and really I'm saying beyond long term, if they're going well optimistically, I'm saying 20%. Tesla's at 25% or so, maybe a little higher than that too. But Tesla's also a massive software company as well too. So it's kind of the software revenues, which are higher margin in general. So like think of like your self-driving, for example. Lucid will not have that kind of revenue margin, at least this long term I see right now. But again, 20% though would be fantastic for them for the auto manufacturer, especially for an EV manufacturer as well. So this is their first quarter 2022 earnings presentation. I'm gonna scroll down here. What you're seeing right here is the actual guidance for the actual vehicles for 2022. So they're saying 12 to 14,000. Now it's used to be 20,000 plus, but they brought it down basically due to supply chain constraints and overall issues they've been having. This is for across all EV manufacturers. So Lucid's not basically special in that way. Cash wise, they're saying liquidity until 2023, so that's pretty good. Like we'll look at that a little bit later. CapEx, you're seeing right here $2 billion, and basically they're delivering the Air Grand Touring Performance in June, and Air Touring and Air Pure later this year. Project Gravity SUV, which actually is a pretty good looking SUV. Like we'll see how that goes. So they're saying that's gonna be launched first half of 2024. So this is another slide I want to show you. This is their first quarter highlights. So they delivered 360 customer vehicles, so well below that 12 to 14,000 mark, which that's to be expected. That goal is more of a long term. It's really going to ramp up in H2 of this year, kind of long term goal they have. And we'll see what really the fall winter time frame. Really, it's going to be Q2 and Q3 where those really ramp up dramatically. Look at potential sales, 2.9 billion. Look at reservations, 30,000. These are all fantastic. If you take potential sales divided by reservations, you get roughly $95,000. So if you look at the actual Lucid website itself, it's right at kind of that air touring mark. Now, if the average was higher, let's say if it's 100K plus, it would show me, hey, there's massive demand for the Air Grand Touring itself. Or if the average is way below 95,000, it would show me, hey, the Air Pure is a massive demand on that side too. But demand between the Air Pure and the Air Grand Touring is pretty balanced right now for at least the initial reservations itself. But again, we'll see what happens in the future for long-term sustainable growth. So looking here is Opex, operating expenses. So you see R&D, research and development, that should peak as they launch their final product in 2024 with the SUV. I'm saying basically at 2025, maybe a peak there, and then as a percent of revenue, it should come down, 2026, 2027, 2028, etc. Sales general administrative, this will ramp with production. Now, as you get scale, basically as production goes higher and higher, it won't ramp as fast on a per unit basis though, but it will go up over time. And I'm saying roughly, $800 million in 2022. This might be low. We don't really have guidance for that just yet. We don't quite know how they're going to land potentially in 2022 and 2023. But again, this is a massive thing here because this comes in way high. I mean, it's going to be a massive cash burn for Lucid as they ramp up production in 2022, 2023 kind of time frame. So I'm saying here is operating income, it's going to be very, very negative. I'm saying, hey, 2027, it might be operating income positive at that point. It really depends on their ramp rate and also the gross margin rate itself too. So, I mean, you could see a strong ramp, but a low gross margin where basically kills off your entire profit potential. Next section here is really basically the fair value. So fair value forward contracts and the fair value convertible preferred stock. This is legacy Lucid stuff. This was wiped out there when they SPAC'd out, and it wiped out last fall as well too. So it's basically the legacy Series D and Series E fundraising rounds, and basically these liabilities got wiped out. Now, what's still around actually is their actual stock warrants themselves. They have roughly $800 million. It's roughly, I think, 44 million shares of stock warrants itself. And that's still on the books as a liability. So basically, as the stock price goes down, you're going to see this liability drop as well too. And as the stock price goes up, you're going to see the liability increase. So in a weird way, it's actually helped them out this fiscal year. So, I mean, as that liability, as the stock has come down dramatically, you're seeing actually this liability drop dramatically as well too, which is almost like an income for them on their actual income statement itself there too. Which is why this is so positive right here. And you see this, I'm saying $700 million potential gain right here this year. Now, as the stock recovers and kind of this post, interest rate fears and post-recessionary fears, this will increase in, I'm saying 2023 and 2024 potentially. But it will be wiped out by 2026 as these basically warrants are wiped out, or they basically expire in 2026. But again, these are some massive numbers here. And these are like non-cash numbers until they're actually redeemed itself. But these are some pretty big numbers overall. So urge for taxes, I mean, you're seeing it's very, very negative right here. I mean, tax expense, I assumed it was very, very low the next couple of years. I zeroed it out because I don't think it's going to matter as much for them. So you're seeing net income down here, the very bottom line. I mean, it's going to be very, very negative. But I'm saying by 2027, 2028, it could be very positive though, too. I mean, but this is years from the future. I mean, we just don't know how they're going to do. We don't have that forward, like, long-term guidance. I mean, it could be great or it could be horrible. We just don't have any idea right now how it's going to turn out. So what I did here is I did free cash flows for 2022 to 2027. I assume a 2028 exit right there is a Gordon growth model for terminal value. Enterprise value, cash debt. I mean, final equity value I got was $22 billion. Shares outstanding 1.97 billion. Valuation I got right now for $11.22. That is well below where we're at right now. But really the big question marks I have is the actual ramp up. Does it succeed, yes or no? Kind of where does it ramp up by year, which we don't have guidance for that just yet. We don't quite know for that 2023 and beyond time frame. It's all just conjecture at this point or speculation, etc. Also, too, looking at gross margin itself. I mean, I know it's going to be low in 2022, but I mean, where does it ramp up to? What's the final terminal kind of gross margin for them potentially? Also looking at, too, is quality control. And this is a big thing Tesla has right now, too, is as you ramp up at scale, making 100,000 vehicles plus, is you actually maintain quality control. You actually maintain your actual processes themselves, too. And like Lucid may have to learn this, too. You might have some periods where you have quality control scares or quality control shocks. So this is an example of that. So this is like Lucid Motors recalling 1,100 vehicles. Again, quality control issues. So having display issues with their actual in-vehicle displays, etc. So again, this is stuff like this, and this is what will happen with new manufacturers. I mean, Tesla had the exact same stuff like this, where it's just stuff like, stuff breaks down. You have bad wiring or bad mechanics or bad issues overall, or maybe the panels don't fit right, etc. But again, this will happen. This won't be the first time. It won't be the last time. But can they keep this actual like total, I guess, bad quality, keep it down to a minimum potentially as they ramp up to full scale? So last thing we'll look at real fast too is also the cash burn rate. So on March 31st, they had roughly $5.4 billion of cash on the balance sheet itself there. So if you look at here, 2022, I'm looking at operating income, negative $1.8 billion, basically cash are going to burn this fiscal year. Looking at here, I'm also looking at the capex as well too. They're saying roughly $2 billion in capex as they ramp up production. They've developed the kind of the Arizona facility, et cetera, and they basically ramp up their actual capacity itself. So you basically take $1.7 billion plus $2 billion. You get right there $3.8 billion. So roughly, I'm saying by end of fiscal year, they should have roughly $2 billion of cash on the balance sheet, assuming no raises or no dilutions or anything else too. They should maintain that. Where the problem's going to be in 2023, I mean, you're seeing in 2023, operating income alone is, basically going to wipe out the rest of that cash itself at some point in that fiscal year. Also, you have a large capex in 2023, I'm assuming as well too. So again, I mean, they're probably going to raise, I would say probably early to mid 2023. I mean, we'll make it through 2022, no problem at all. But 2023 will be a raise there. And if I had to guess, it's going to probably be a stock dilution itself. Maybe even large debt load itself too if they maintain like large cash flows. But again, these are all giant question marks we have right now. And if the ramp goes badly and they can't ramp up at scale fast, this cash burn rate will absolutely crush them. And they'll basically be at a point where they have basically low volume production and low cash. And all of a sudden right there, they're in a tight spot. Hey, but that's Lucid Motors. Be sure to sub to the channel just right there. Also, drop your comments down below what your thoughts are, whether you're a bull or a bear on Lucid, etc. Also, if you have any thoughts on like future videos for stocks, like fundamental analysis just like this, or valuations for other companies, drop that in the comments as well too. But yeah, that's the exchange.